What are we going to do this week? Bitcoin did a big, massive dump on Friday, and now we don't know when the market opens this week. Is it going to continue to the downside, or was that just a leverage flush out and we're just going to continue up as if nothing ever happened? I know that you're sitting here thinking, why are you asking me, Annie? I'm watching you so that you can tell me. So we're going to get into the charts to have a look at that and see what we can come up with. I've actually got some pretty interesting things to show you in this video, and we're going to break it down as we always do every Sunday, full market update, starting from the higher time frames, working our way down to try to investigate where that false move week beginning is going to start this week. As always, I give you the alpha, you give me those likes and subscribes down below. So hit that button and let's get right into it. Now, when we zoom out on Bitcoin and have a look at the daily time frame, this is the candle here. So when you zoom out, you can see it's really not that big of a deal. But when you're trading smaller time frames, it does feel very large and very dramatic. At this point in time, price is still above the 20 EMA on the daily time frame. That is still very, very bullish until we have a market structure change, which we don't have right now. So when we're looking at the candles alone, we have basically a double top here where this peak in price action repeated the level of this peak. And this actually pushed up into the 71K level that I was talking about on my last video. It was on Thursday when we were looking for the midweek reversal. And what I said on that video was there was a chance that we would go up into the 71K region and then possibly reject from there. And that was also a good area to sell off any altcoins at the highest point possible that you may not want in your portfolio. So hopefully you guys caught that. Hopefully you did that. However, when it comes to altcoin for long-term investing, you would just ride the wave on these sorts of things. I would not be trying to pick the bottoms of every pullback and selling in and out frequently when it comes to having just a altcoin portfolio for this cycle. But that's not what we're talking about. What I actually want to show you, what I find very, very interesting about the data that is being presented to me right now is in relation to these liquidation zones. Now, if you've been watching this channel for a while, you will know I've had this area above price marked for quite some time, which sits between 72,800 to 76,760, and below price we had an equally high amount of leverage all the way down to the scary number of 50,880 to about 56,500, which really is just the bottom of this accumulation range, right? So we know we're in the halving phase, accumulation range, and price is going to fluctuate here for quite some time, which is what it's been doing. And we know that the top of the range is set because we've had multiple touches to it. We don't know where the bottom of the range is at this point because we don't have a clear bottom. We don't have multiple touches to one particular price level. So that's what we're actually on the hunt for in this range. And that brings me to the liquidity because that usually gives you an idea of where it is. Now, this level down here has actually changed. Let me show you on high block. So what I'm looking at here is the 3-month liquidation heat map. And the reason that I'm choosing 3 month is because I want to get the liquidation levels of this entire range that we've been ranging for, and we've been ranging since about the end of February. So 3 months is ideal to kind of figure out where the leverage is within this range. And what you may notice immediately, if I zoom in on this area here, you will notice how we still have quite high levels of leverage above price, right? So all of these yellows into the light greens, they show you this big, large amount right here. And that's what we're kind of looking for when we're looking at liquidation heat maps. Below price, it's lightened off a lot. So a lot of this area here previously used to be really quite light yellow, and it's now turning into the green zone, which means that longs have taken profit because the liquidity below here is the liquidation levels of long positions because it's below the current price. So if that is clearing out, longs have taken profit. And the largest area that we have is still sitting at the 55,800. I would probably say the range of concern is say 54.4 now to 56.4. So when I go back to my daily time frame, then I've just adjusted that lower liquidation level, and we can see that that is the bottom of the range and it's still around the 200 EMA. So I always say for long-term macro analysis, the daily time frame 200 EMA is a really, really good EMA to act as support where you would expect trend continuation if we were to have a big move to the downside. Even the 4-hour 200 EMA is very significant as well. And the 4-hour 200 EMA would be the same as the daily daily time frame 50 EMA. So there's really quite a massive gap between the two right now. But the longer we range sideways, the closer that they will come together. So worst case scenario, if we do come back down to the bottom of this range, the liquidity that they're going to want to take out has actually shortened. So I don't think the 50,800 area is a concern anymore. And that's a positive thing, providing the bottom of the range holds here. If we were to have that much of a move down, it would still be a good accumulation area considering where we are in the cycle. So I'm not too worried about that. We do have some negative astrology coming up. I'm not the expert to talk on that. But anyway, so this here is currently looking like a bit of an M formation, and that is bearish. However, we haven't yet broken the 20 EMA, and that is bullish. So we really don't know until the market opens. But we have these things to keep in mind, and that means now we can go down to smaller time frames now that we know what the macro is kind of looking like. Now, there's a lot of controversy in my Discord currently about the 4-hour time frame. So I want to talk about that because I'm going to set you guys straight. So we have this V formation. This was our level 1 rise. This was our retracement, level 2 board meeting, level 3. Okay, so the rises over here, we would say are played out and complete. And then you start to look for retracements or reversals or whatever it is. And I think what we got here was a sideways drop. Now, the controversy is in this movement here. So I see a lot of my members in Discord are currently calling this a level 1 4-hour time frame rise. And I can see why, because you're counting the vector candles here, here, and here. And those three on a lower time frame would equal 3 hits. On a 4-hour time frame, that equals a 1 level rise. Yep, I see it. I don't agree. And the reason that I don't agree is because of the macro where we are, also combined with some negative astrology coming up, but also here's how an M formation works. So if this was level 3 and all of this was going to turn out to be an M formation, then on this side, the inside right side of an M formation, we expect the market maker to turn up 3 times. And they're turning up 3 times to form the trap. And that's what happened here. Turned up 3 times, stop hunt into the 71K shorts. The damage is done. So I don't really consider this, and look, I may end up getting proven wrong and the whole Discord may be right and I'll probably never hear the end of it. And if that's the case, you're banned from like I told you so. So I'm just letting you know, guys. But look, whatever, we'll see when the market opens. But the way that I personally view this right now is that this is the inside of a 4-hour time frame M formation with a spike into the short orders that we knew were waiting there. And then we had the news event, which dramatically dropped the price. And so really what I'm looking for now is a board meeting or a retracement that will give me a lower high for further downside. Now, remember, this is a 4-hour time frame. So as we go down in levels, I may see something different. And if I see something that is showing me upside potential, I still have to be very, very careful that any upside potential on a lower time frame could turn out to only be a little bit of a vector candle recovery. And so we end up with something that looks like a little bit of a recovery here, and then we get our drop through there. The only thing that would change my mind on that and make me believe that we're going up from here is actual market structure change with higher highs and higher lows. So far, that has not happened, but it's the weekend. We would not expect it to happen yet. So we know that those short orders held. We know that they dropped price, and then that trapped us into the weekend. That was essentially the Friday trap. And now we're in the weekend consolidation. Now, before I move on to show you some very, very interesting information that I think you're going to enjoy, I just want to take a second to let you know, if you are wanting to learn how to trade this method in full, then we do have full courses and a community that you can join. The link is in the description down below. You can see here on our testimonials in our Discord, we have many, many very, very happy community members that have really turned around their trading. So a lot of these members learned to trade, stuck with it for a couple of years, couldn't make it work, and then they came here and things just started to change for them. So if that's your situation, maybe it's time to look at a new method. and hopefully we will be the one that eventually gives you the answers that you're looking for. So anyway, check out the link down below if you are interested in that. Now, let me show you what I wanted to show you about this and why I think we still need to be cautious potentially of more downside, because there's actually a few things I want to show you. First of all, we are building new liquidity. So this is more recent from June 5 to June 9. If we look at the max liquidity, we're currently at 10 billion. That's usually on the way. That's something that we would expect in a drop level 1 or 2, but it would usually be a lot more than that by the time we get to 3. There's a lot of liquidity below price. We also have some significant news events next week. So we have core CPI, we have the federal funds rate, we have the FOMC press conference. It's going to be a high news week. Now, caution, because I say this every time, when it's a high news week, if the trades don't meet all of your conditions to enter, just sit on your hands, because news weeks like this, they sometimes can be obvious, and that's great. If they are, take the trade. But when they're not obvious, don't force the trade, because something like this really, really can hurt your trading account. And if you just wait a week, you can remain profitable. So be very, very careful of this. Exercise patience. I always say, if the trade setup is there, take it. If it meets all of your rules, take it, regardless of the news that's coming up. Just be cautious around the news events. But if you find that you're breaking rules because you want to get a trade, then this is going to put those trades even more at risk. So be very, very careful of all the news events that we have coming up next week. And in addition to that, I think another reason that we need to be cautious of further downside is the Bitcoin Fear and Greed Index. We're still currently at 75, so we're still very much in the greed phase, which could be a little bit of a trap, having retail believe that that was just a liquidation hunt and everything's just going to be normal when the market opens. So if we still have greed, then retail will still continue to open long positions, and that could end up being a trap. So just be very, very careful. If there are any moves to the upside, they are likely to be moves that are just going to give you a higher position to sell from, as opposed to a complete change in trend, unless, of course, we actually start to see that market structure change. Another thing I wanted to show you was this, and this is the CFTC CME Bitcoin Leverage Funds Net Total Combined. This is a new record short. So CMEs are shorting is the moral of this story. It says here there is a significant increase in short positions in Bitcoin, reflecting hedge funds' expectations of a price decline. Now, could that be them basically front-running FOMC? Maybe. Absolutely maybe. They may be expecting bad news, so we just have to be aware of that. However, I want to point out the good side of this, which is what it says here. It is anticipated that these large entities may be using a hedging strategy by buying Bitcoin in the spot market or through ETFs while simultaneously shorting futures contracts. That essentially means buying the dips, but they're manipulating the dip, right? So they're manipulating it by shorting to freak all of us out whilst they accumulate spot on the other end. So when you know that, you do that too, okay? We don't want to try to beat market makers. We want to trade in line with them. That's how we become profitable. So if that's what's happening, then that means if there is further downside, which comes all the way back to what I was saying about the daily time frame leverage changing down here, if it does turn out to be that dramatic and head down into this zone, we kind of know what the hedge funds are doing, and we shouldn't be worried about any move to the downside, because when those short positions are closed, a significant price increase is expected due to the surge in demand, which will be very, very bullish. And that is what we've been waiting for on the daily time frame anyway. We're waiting for this accumulation phase to kind of break out and be done with. Now, two things I would watch though. I would not say to you guys that it's a guarantee that we're coming down to the bottom of the range. I would say at the very first, watch the middle of the range. If you're looking to long-term invest, look for the middle of the range here, because we've got a vector candle there, and that's going to be our first area of interest. So between about 61.3 to 66.4. Only if we break down below that would we then start to look for these low levels. So I don't want you, this is a big risk when people want to buy dips. They expect the dip is going to go a lot further than what it is. I don't want you to automatically have in your mind that we're going back to 54.5 to 56.5, because it may not happen. We may not get back into this zone. We need to watch market structure if we do come down into the halfway mark first. if there is a higher low there at any, and this could take months, by the way, guys, but if there is a higher low there, that could very well be the last chance, and that will be the hint of a bullish breakout. So if all we do is come into here, hold that level, we would expect we're going to break out next because the market structure is changing within the accumulation range. Okay, so we will monitor that on this channel as we go anyway. But when you have a look at this and you see that they're kind of forcing it to the downside for the purpose of filling their own pockets, we should be doing the same. Okay, so let's have a look at the heat maps and what's going on currently. We do have some short orders sitting here at 70,350. So it is possible, like I said, if the market maker wants to send price down, they'll send it up first and vice versa. So if we have these short orders currently waiting here, then it's possible that eventually part of the false move week beginning, it's possible that this range that has been holding sideways all weekend pushes up into those short orders before we get further downside. And that's something we're going to have to look out for. And the reason I say that's possible is because when we scroll down, we can see that there are long positions waiting quite significantly below the current price. So at 66,200, we have some. And then there's quite a few, even more, between 65,000 all the way down to 63,000. And coincidentally, that is going to be in this halfway range. Therefore, when we have a look at this right now, this is what is making sense to me. And this is what I personally will be looking for, is a breakout of this range right here that we have for the part of the weekend trap. And now I'm on the 1 hour time frame. So remember, this is a very short term expectation right here. If price does break out of this range, it's going to also break the 200 and the 50 EMA on the 1 hour time frame. And then it may make a run up into those short orders that are sitting there currently at about 70,350. Now, if we have a look at the leverage that is available, there is a level there, which comes from high block. We can see that there, over here, there are those shorts sitting at around that level. And that is what I've marked on my chart right here. So there is leverage to be wiped out if there is a false move up to around 70,350. There are shorts currently waiting there. This is how I personally have chosen to play this. And I've already shared this with my Discord, but I personally believe that as a short-term little scalp, it is worth longing into that range. If we break out and retest this range, see if that turns out to be the false move, meaning that it's a stop hunt into the zone or market structure changes around there or something like that. And then if we start to get a rejection from there, that will be the highest point possible for you to open a short position. If we get that rejection from down here, that could end up being a very, very juicy short if it does in fact take us down into 66,200. It would end up looking something like this. If you were to short just underneath those existing short orders and you take your profit just before the current long orders, it could be a 10-to-1 risk reward trade. It could be massive, but it's really going to depend on price breaking out of this zone, heading up into there and then getting a rejection. If I see my rejections around here in my market structure change, that's where I will plan to bag flip short and take a short back down into multiple levels before this. I'll be watching for the 50% of the high and the low of the week. I'll be watching the 800 EMA and all of this liquidity around here, the low of last week, and then eventually down into where the current Binance longs are. So at any one of those points, I could have my 3-level count and exit this trade. And the only reason that I'm taking this kind of a risk is simply because of the fear and greed index. A lot of people are still very, very bullish and they believe that this move was just a liquidation move and we're going to continue up from here. So that could be a trap if that is what most people are believing. And I want to assess whether that is a trap if price returns here. And if it doesn't reject there, then I'll be looking for market structure and I'll just stay long. Now, let's have a look at some heat map orders for Ethereum, just to give you some price targets if you're trading ETH. And I'm also going to have a look at Solana. So whilst I'm doing that, if you have not yet hit that like button, please be sure to do that because I am sure that that was valuable information. So on Ethereum, currently we have short sitting at 37.30. This was one I contemplated doing the same strategy to, longing into that zone and then potentially down into ETH's lower orders. However, I didn't take it because the risk reward wasn't all that good, but I will be watching this level to see if there's a rejection instead. So 37.30 is the area I'm going to watch to see if there is a good short position I can take from there. And if there is, then I've got 36.25 is one target, but this area down here really, really intrigues me. And I'm going to show you why. It's pretty much because of the numbers. look at this, 16K worth of orders at 3,400. That's a lot. Like, even if you look at the other red zones around that, they're in the 5, 6s, up to 8, but this is double that. So there is a lot of people with a lot of money that think Ethereum is going to 3,400, and if it does, they want a piece of it. And when we have a look at that on a chart, like look at this. So it doesn't have long to go to hit into those short orders. That's why I didn't take it as a long position into this zone, but I am looking for rejection here. And if we get it, that is also another massive, massive trade down to 3,400. So there's definitely people out there that think the FOMC news next week is not going to be bullish, and they are really looking to get low buy orders on their favorite cryptos. So we'll do the same process with Solana. Now, Solana had a better risk to reward as well up into that zone. So 165 is where people are looking to short currently. And it had this dip down here that gave a pretty decent entry. I took a long position here. And again, I'm taking it to reassess what happens at around 165. If we reject there, I'll be opening a short position. If these orders get pulled and price just continues up, great. I'm already positioned and I'll be risk-free by the time that happens. Closely monitoring Solana as well. And as well, there's a lot of orders below price. Should I get that rejection at this highest price possible? And the highest that I can see currently is this one here. So this 23K order at 153. When you actually zoom out on Solana, you can see there's actually really, really a lot of high-level orders, really all the way down to $101.20. So people really are hoping to get some very cheap Solana. But I'm more interested to see if we do reject it when we get to that 153. That's going to be a revisit of this wick right here. So that would be my initial trade. If we reject here, I'll try to short it back down into there. And that's about a 5-to-1 risk to reward. So that is my plan. And that is how you trade, essentially. Always have a plan for what if it goes this way? What am I going to be looking for? What is going to be my signal that this is going to continue now to the upside? What is going to be my signal that we have some bearishness coming? So in my opinion, I think it's worth taking the long position. What's for me, not financial advice for you, but for me, I'm taking a long position as a short-term scalp into where I can see the high-level short orders are waiting on trading light. And if I see weakness and rejection there, that's where I would plan to open a short position at the highest price possible to short down for further drops. If there's no weakness there, I'm okay because I'm already in my long position. I'm just going to stay in it. So you never have to worry about what is price going to do. You just have to build a plan for what you will do if it is bullish and for what you will do if it was bearish. And then you just wait for the price to show you your triggers to enter that trade.